All right, let's get started. So, the cardinal rules of trading. First one, protect your bankroll. Risk management is key. Know thyself. Stick to the system. Track your metrics. Ignore the news. Select your instrument for trading and the principle of Kaizen. Now, I'm going to run through each one at a time and give you details on what it means. So, have your notebooks out and make relevant notes because these are really important. So, the first one, protect your bankroll. This is the most important rule of the game. If you protect your bankroll, you live to fight another day. Um, Believe it or not, it is much more important to protect your bankroll than to generate profits. Most of the mistakes that traders make is not following this rule. So getting into losing position, letting the loss grow, and eventually eating up a sizable portion of their account where they are no longer in a position to recover. So as I said, it is more important than being profitable. The reason why 80% of traders fail is because they don't follow this rule, protecting your bankroll. Um, the difference between trading and gambling is not a big one. Unfortunately, the mistake that a lot of traders make is to approach the business of trading with a gambling mentality, and they start to get emotional about trades, and they start chasing losses, pouring good money after bad money, not following the rules, and the lack of discipline eventually leads to them making mistakes from which they can no longer recover from. So, majority of traders fail because of the following reasons: lack of discipline. So I'll talk about this in the upcoming slides, but it is important if you are trading as a business that you have a system and you stick to the system. Otherwise, you risk falling into the group of traders that are essentially gambling, and that's not how you run a business. So another mistake that traders make is holding on to losses, hoping the market will turn. This is also called smoking hopium because this never happens. As much as we try, we can never exert our will on the market. The force of the market is too powerful, and the best we can do as traders is recognize when we're wrong and rectify our mistakes. Now, mathematically, protecting your bankroll means a 50% loss means you have to double your account just to reach break even. So let that sink in. It is much better to take a small loss, not have the emotional baggage of babysitting a losing trade, and being able to start fresh. Also, get these terms completely out of your mind. Diamond hands and hodl, these are absolutely bullshit terms. Trading means taking profits, and actually an axiom that you should remember is if you don't take your profits, someone else will take them for you. Also, there's nothing wrong with taking profits. I mean, if you're trading Bitcoin and you rode it from 10,000 to 30,000, you take your profits, you re-enter on a dip, and you can re-enter on a larger size. So forget about these terms completely. So, safeguarding your bankroll means you live to fight another day. It allows you to stay at the table and play. So this is, if you take anything away from this course, it's that you must protect your bankroll at all costs. Because if you want to generate success in trading, you need to keep your resources safe so you can continue sitting at the table and playing and getting through the ups and downs without it impacting your bankroll. So as I said before, if you end the year flat, you're already ahead, believe it or not. It is better to end the year at 0% P&L than to end it down 30% and have to start fighting to scratch back some of the losses, because that means you're already behind. Lastly, if you protect your bankroll, you will avoid having to deal with emotional roller coasters. I cannot stress the importance of this because to be a successful trader, you need to be in control of your emotions. And you cannot be in control of your emotions if you are sitting on a losing position and babysitting a loss. Trust me, I've been there. I've babysitted seven-figure dollar losses. Some of them eventually turned around after weeks or months. Some didn't. And I can tell you that aside from not sleeping at night and being super emotional when it comes to trading, you also miss out on opportunity costs. So babysitting that loss means that you no longer have the resources to chase other opportunities that come your way. So that is it.